Welcome to Wealth Coffee Chats, folks, for your daily live updates. Get the most out of today's episode by participating in the chat. Make sure you ask some questions, be part of the conversation, have a bit of fun, grab a coffee or a tea, take some notes, and get ready to start your day, folks. Quick few housekeeping rules, though. No spamming, no advertising or self-promotion in the chat. That's not on. Be kind and respectful to everyone when participating. And most of all, have a good time. Real estate investing can be your biggest asset. It also can be your most expensive asset when it comes to getting it right or getting it wrong, folks. It can be time-consuming, stressful, and that's why here at Positive, we have what's called a 6-star team, a full-service team that provides integrated wealth and property investing solutions and services simply designed to help you progress towards your goal of passive income through your property portfolio, folks. Make sure you check out our other podcasts on the Positive Mentor Network. Not only is there Wealth Coffee Chats, there's the Urban Property Investor. Drops every Wednesday with straight talking investing strategies and lessons with Sam Saggers. Property Investor Tales. This is where our clients, you guys, share real life stories from property investing, hosted by some of our advisors and strategists. And that's done every fortnight, dropping every Monday. Wealth, Wine and Wisdom, folks, that debriefs the week that was in the world of finance and property, hosted by yours truly, Jason Witten and Andy Fenton on Fridays. Hey, good morning, folks.
Good morning, everybody. Welcome to another Wealth Coffee Chat.
Hope you're well, folks, wherever you are.
There it is, team. Morning. Morning, wherever you're tuning in from today.
Early bird gets the worm, they say. Here at Positive, we offer a 6-star team. It's a team that help you at every stage of your wealth creation journey.
Good morning, everybody. Welcome to the Finance Fridays edition of Wealth Coffee Chat. Coming you today from sunny Brisbane in the W Hotel. We've got an event on this weekend for business owners. So excited to spend time with our clients and some potential new clients. Now, what is a broker's favorite drink? Interest on the rocks. Glad to be joining you guys live again. I know last week we had a recording. Hope you enjoyed the topic we discussed then. Just to follow up on that, interest rates are still unlikely to be cut, at least this for the rest of 2025. September's inflation has actually increased by 0.4%. So that's month on month. Year on year inflation sits around 2.8, which is on the really high end. So there's no indication that the RBA wants to drop rates because of how high inflation is at the moment. Westpac are still saying potentially there could be one, and there would be another 3. Both CBA and ANZ are saying that where the earliest one would most likely be February next year. And just with the one for this rate cycle, and now about saying May 2026, so towards the middle of next year, would be the next cut, and that would most likely be the last one for this cycle as well. So, unfortunately, Jeff, yes, even with unemployment. Even with unemployment increasing, the notes from the last RBA meeting is showing that it's unlikely that there will be sort of any rate cuts, any more rate cuts this year. There will be at least probably another one, but there won't be any more for this year. So no Christmas joy for a lot of mortgage holders. But there are things that we can do now. Thanks for your comments and for joining, Jeff. One of the things that we could use to help to pay off our home is the offset account. And I read an article this week, which I found fascinating, is that 57% of mortgage holders have not checked whether their offset account is actually linked to their loan. Now, if you don't check on that, there is an assumption that when we set up an offset account, the banks will do the right thing. And there have been instances where it hasn't been linked and you'd have to go back to the bank. Now, I know that some lenders actually have backdated the interest when it was their admin fault, but it's our responsibility, because it's our loan, to make sure that the offset account is actually linked. And you can do this by checking your online banking, because usually the offset account will tell you which loan account it's actually linked to. Or you can call the banks and get them to check to make sure that they've ticked the box to say it's linked. I mean, it could be as simple as that. Somebody didn't tick a box when all the accounts were set up and you're not saving interest. The interest that we could potentially be saving, could be in the hundreds of thousands by not ensuring that the offset account is actually linked to your loan. 10% of people, and I think there's a percentage of that's a lot more, that assume that the actual offset account was automatically linked. There are some lenders who actually require you to contact them to go through the process of linking an offset account. 9% of people who've actually contacted the banks have said that hasn't been linked, and they were doing all this work in terms of putting money to the offset account, and they were getting no benefits out of it. Now, as the older generation, and we're talking about baby boomers, 67% of them have never checked whether it's actually been linked, and most of them have had the loans for a very long time. So what I would encourage everybody is to check your loan, call up your bank, and make sure that the offset account, because it's important to make sure that the money that you have in the offset account is actually working to help you pay off your home loan faster. Now, the other thing around offset account is I had one of my clients who had a loan with a non-bank lender, and they advertised the fact that they actually have an offset account. But when we dug more deep into it, we discovered that this particular lender doesn't have an offset account in the true sense of this account is yours and you control it and you decide whether you want to keep it open or closed, and the money in there is actually in your control. So this particular lender had an offset account. They set up an account of the loan. We read the terms and conditions and actually said that the sub account the lender isn't actually in control of that sub account, which side, if they need to close that account, they can decide whether the money in the offset account needs to be transferred into the loan. So it is in their control, not yours. Similar to the redraw facility, the money is in there and it's in the lender's control or the bank's control, not you as a mortgage holder. So the distinction in this scenario is that redraw meant that you could only transfer in the loan into your direct debit account, and the sub account that they used and called the offset account was actually enabled you to pay anybody. So the money could be moved to any account, but you don't have control of it, which means that if you pay out the loan, that sub account disappears. Whereas with most offset accounts, it's your transaction account that's linked to the loan, and even when the loan gets paid off, the transaction account is still there. It's no longer linked to the loan because the loan doesn't exist, but you are actually in control of whether you want to keep that account open or not. So if you don't have an offset account with a bank it may be worth going and having a conversation to see what type of offset account it is, and if you're actually in control of that, on how you would like to proceed moving forward. So yeah, I just wanted to cover the offset account because I found it really interesting that we often make assumptions, and with everything that's going on with loan settlements and refinances, that we don't put the step to actually check whether that particular feature for us has actually been set up correctly. I did have a talk to one of my other clients, and the other thing that I encourage everybody to do, especially if you've done a construction loan, is at the end of the construction period, review your loan. Now, my client said to me that they didn't think they could review the loan because they had only moved into the property for a few weeks. But they had actually a construction loan, so they settled on the land. They had, the guys were building it. It was a 12, 18-month build. And once they moved into the property, they were like, okay, well, we're here now. So we could, we didn't think it was appropriate to, or we didn't think there was an opportunity there to negotiate on the rate. The reality is they've had the loan for 18 months. They had a rate reduction of 0.5%, which was phenomenal. And, it wasn't until they were seeking more funds that they realized the new funds had a lower interest rate than the two other loans that they had. And you could also consolidate the loans, because often with construction, you've got a loan for the land and then you've got a loan for the construction. And once that's all finished, you end up with two loans, which, is not necessarily needed. So there is a conversation there of consolidating the loans. You've only got one loan and you can link the full loan, but also an opportunity to negotiate on the interest rate. What I will remind everybody is, if you can, every 6 months, review your interest rate and negotiate with the bank. At a 12 months, but put it in your diary, put it in your calendar. Make sure that every 6 months you talk to your broker, to your lender, depending on who organized the loan. I would recommend absolutely working with a broker, because even if you've done the loan through the lender, have a conversation with a broker so that you can see what else is in the market. Because we want to make sure that, yes, your existing lender, but the broker can compare that to what else is available in the market. And if you can get a loan cheaper with another lender, we can take that information and use that to negotiate with your existing lender. So just a couple of tips. Thank you for joining me for Friday. Enjoy your weekend, and I will catch up. Bye, guys.
Thanks for watching another episode of Wealth Coffee Chat, folks. Make sure you like, subscribe, and turn on your notifications so you never miss a thing when we go live. Improve your portfolio and investing game, folks, with Wealth Coffee Chats live every morning at 8:10 each weekday. Make sure you join us. Previous episodes are also available wherever you get your podcasts, folks, as well as our other podcasts from the 6-Star team here at positivementor.com.au.